following last Friday's disaster for stocks, which if you really look at the headline S&P, NASDAQ, Russell, it was rough. But if you looked under the surface, it was even worse. AI stocks, momentum, tech, software just got utterly obliterated. Now, I'm optimistic that next week could be better with major catalysts like Nvidia earnings, PCE, personal spending, a lot of regional Fed data, Chicago PMIs, and much more that will be the main moving or driving catalyst of markets. There will also be a big focus on what the consumer is doing. Is the consumer as bad as we thought on Friday? Or is it, well, maybe a little bit better than that? With some of your earnings, you will get a glimpse into the consumer and consumer strength. Home Depot, Lowe's, Domino's, among many others. I also do think when you have the VIX spike like we had on Friday, 17%, it usually does set you up for a pretty good following next couple of trading days. Now, part of the fear on Friday was also this new strain of coronavirus. It's not a variant, it's a totally new separate coronavirus strain that had people concerned on Friday. You've seen this by Pfizer, Moderna, and Clorox even jumping their share prices, closing well in positive territory for the trading day on Friday. It does not seem like there is new news on this front, and as long as there is not human-to-human transfer of this new coronavirus, then I think Wall Street is going to take a sigh of relief, which so far does not look like there has been any humans that have gotten this virus. So for now, I think Wall Street may have freaked out a little bit too much. Fed Goolsbee did speak as well yesterday. Fed Goolsbee says sentiment not as good as a predictor as in the past, basically referencing the political division within the University of Michigan's Consumer Sentiment Survey. At least someone on the Fed is acknowledging that. I think some of the fear that I have had and markets have had is that the Fed's just going to look at 5-year, 1-year inflation expectations from the University of Michigan and say, oh my gosh, we have a major problem. 5-year inflation expectations haven't been this high since 1995. Oh my gosh, and start freaking out. Whereas in all reality, Republicans expect no inflation. Independents, inflation expectations really have not moved. But Democratic inflation expectations are through the roof. I mean, they're like screaming from the mountaintops that we're, going into another round of hyperinflation. And, that's just very political. That's very skewed. And right now, well, I think it's safe to say we're not going through another hyperinflation scenario. So it's good to hear Fed Goolsbee saying this is really not something they're paying attention to. Fed Goolsbee says still sees rates declining after a period of uncertainty. Fed Goolsbee says the Fed should be cautious amid government policy changes. Fed Goolsbee downplays increase in consumer inflation expectations. Again, that's what I just showed. And Fed Goolsbee says he is comfortable that the Fed is on track to achieve 2% inflation. So first and foremost, let's start with the economic data because it's really going to be a big freaking week for data, especially again considering Friday where you have these growth concerns that affected the markets as much as they did. Some of this data is going to be critically important. Starting off on Monday, 8:30 in the morning, Chicago Fed National Activity Index will be coming out, expecting that number to get a little bit better. Dallas Fed Manufacturing Index, expecting that to get a little bit better at 10:30 in the morning tomorrow. But really, manufacturing's not something that we're going to pay too much attention to. It's been in a bad place for a while. It's only 20% of the economy. Manufacturing, if that was going to put us into a recession, it would have done that a long time ago. It's services that caused a lot of the fear on Friday with services PMIs that plummeted last month. Okay. And the consumer that's apparently, slowing down quite a bit more. Now, Tuesday morning, 4:30 in the morning, you're going to get a speech from Fed Logan. Keep that in mind. S&P Case-Shiller home price year over year. House price index for December, house price index month over month and year over year as well will be coming out on Tuesday. S&P Case-Shiller home price month over month also coming out Tuesday morning, 9 o'clock in the morning. CB consumer confidence comes out at 10 o'clock in the morning. Richmond Fed manufacturing index, manufacturing shipments and services revenues will be coming out at 10 o'clock in the morning. Dallas Fed Services Index will be coming out at 10:30 in the morning as well. Fed Bar speaks at 11:45. Fed Barkin speaks at 1 p.m. And you have a 5-year bond auction at 1 p.m. as well. These 5, 7, 10-year, 20-year, 30-year bond auctions are important right now because they do not really revolve around the Fed's policy changes of next month or next year. They really trade more along the lines of what does Washington's deficit spending look like? What's the risk to the government? And what's inflation going to be like over the next 5 years? That's what more or less kind of feeds into 5-year bond auctions. So if those 5-year bond auctions come in good and the yields fall, or don't come in as high as expected, 10-year treasury yields are going to fall, and that's going to be a positive for markets. Really positive for 10-year treasury yield, which is a positive for markets. Now, on Wednesday, you will get a speech from Fed Barkin at 8:30 in the morning, new home sales for January at 10 o'clock in the morning, and new home sales month over month at 10 o'clock in the morning. You will also get a 7-year bond auction. Again, 7 years, a little bit more important than the 5-year. That comes out at 1 p.m. on Wednesday. Fed Bostic speaks at noon on Wednesday, and that's pretty much it. On Thursday, it's the start of really your data dump. You get durable goods orders month over month. Last month, you were negative 2.2%. You're expecting a positive 1.3% number. Now, your GDP growth rate quarter over quarter, second estimate for Q4 will also be important, expecting that to fall from 3.1% down to 2.3%. Initial jobless claims will be coming out, expecting that to rise from last week. And we can see the inventory data is very important as well. Where is that? Might be on Friday. You can see real consumer spending quarter over quarter, second estimate for Q4. Fed Bar speaks at 10 o'clock in the morning, pending home sales month over month and year over year at 10 o'clock in the morning as well. And then on Friday, you get, again, another data dump. Core PCE price index month over month. Last month was 0.2%, expecting 0.4%. If that comes in lower, that's good. Higher, that's bad. Personal income month over month expected at 0.4%. Keep in mind, this is really not consistent with 2% inflation. We want to see this go down at this point, okay? Personal spending month over month is expected to fall from 0.7% last month down to 0.2%. A number that comes in lower than 0.2% is going to be seen as a negative and kind of bring up more of those, economic concerns, growth scare, if you will. So that's a big number to be watching for on Friday. You will get retail inventories excluding autos, wholesale inventories month over month, advanced data for January, Chicago PMIs that will be coming out. And why some of this data is so important on Friday is because it will change the current estimate for GDP for Q1, which a recession is 2 declining quarters of GDP. So Q1 GDP for 2025 is currently estimated at 2.3%, but we will get a new update this Friday, February 28th, based on, again, a lot of that inventory data coming out on Friday. So this will be important just to, again, confirm, is the economy slipping? Is GDP slipping a bit? And I think that's what markets are going to pay very close attention to. Again, Chicago PMIs, 9:45 in the morning as well. That does tend to be a market moving catalyst also. Now, another huge story of this week is going to be earnings. There's going to be actually quite a bit of companies that you're going to recognize here that are important. Coming Monday morning, you have Domino's and Berkshire Hathaway. Monday and after hours, you have Hims and Hers, Riot, Tempest AI, that's that Nancy trade, Cliffs, Zoom, Diamondback Energy, Realty Income, Chegg, and Trip.com. Tuesday pre-market, Home Depot, Planet Fitness, Keurig, DigitalOcean, Krispy Kreme, Scotia Bank, American Towers. Tuesday and after hours, Kava, AMC, Axon, First Solar, Lucid, Instacart, Lemonade, Workday, Zeta, and Intuit. Wednesday morning, you have Lowe's, NRG, Advanced Auto Parts, AB InBev, Stellantis, UWM. And then Wednesday and after hours, look at that. You have Nvidia, Snowflake, C3 AI, Salesforce, Joby, IONQ, Root, some other names. Now, Nvidia, I'll be the first to tell you it's not as important this time around as it was previously. I mean, following the whole DeepSeek situation, we've had your big tech names that have reported earnings. So Nvidia would have been a lot more important if they reported first, or were among some of the first, multi-trillion-dollar names to report. They're not. And we already know what the CapEx guidance looks like from Meta, from Amazon, from all of these other companies. And they've actually just raised their CapEx, guidance for this year. So at least for this year, things seem to be fine. Now, I think a lot of attention is going to be paid to Blackwells, and if Nvidia is still on track and going to be able to push those Blackwells out. An issue there could be an issue, broadly speaking, for the markets, just because of Nvidia's size at this point. It's a very large company, but I actually expect that given the stock has sold off quite a bit, you could see a very positive reaction to Nvidia earnings. Although I don't see too many people that are like bearish on Nvidia. I don't think you're so bullish heading into Nvidia's print that good numbers are not going to be rewarded. I think good numbers, good guidance, the typical Nvidia beat and raise will be rewarded. Now, is it going to go up 25%? Probably not. Could it go up 5 to 10%? Probably. And I think that could overall be a boost to markets coming Wednesday and after hours heading into Thursday. Now, on Thursday, pre-market, you will get Norwegian Cruise Line, Vistra Energy, TD Bank, and some others. In after hours on Thursday, you will get SoundHound, Dell, Archer, Rocket Lab, Clover, Duolingo, Transmedics, and Opendoor. And then Friday pre-market, you have Fubo and some other names. Now, the consumer is going to be in focus yet again this week. Domino's, Home Depot, Lowe's, some of those kind of names. It's going to be important for, again, the consumer, for real estate markets, kind of going to tell us a lot, right? And I think Domino's is just important because of the consumer, right? Pizza's usually not something people like cut back on. If anything, pizza sales in recessions actually do pretty well because it's a good value. So that's going to be important to watch out for this week. Again, on Friday, the Fear and Greed Index completely plummeted from 45 on Thursday, which was neutral, down to 35, which is about midpoint exactly of fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, currently in fear. Percent of stocks trading above their 50-day moving average had a big down move on Friday. 41.5% of stocks trading above their 50-day moving average. Markets are like not super great. Okay. Now I know a lot of people just look at the headline as a B and they say we're pretty close to all-time highs. Markets have done fine, but less than half of stocks are above their 50-day moving average. So over the last couple of weeks and really month or two, there's been a lot of downside momentum in markets. And broadly speaking, you feel this if you are a stock picker right now. Now, the AI Investor Sentiment Survey is still sitting at very bearish levels, not quite as bearish as where we were, 2 weeks ago, February 12th or so. 47.3% of investors were bearish. That was a multi-year high. You dropped to 40.5% of investors that are bearish, but that's still very high. Neutral investors currently at 30.3%, and bullish investors at 29.2%. That's just not. It's just not a very good number there. And the VIX, I think this is also important. The VIX was up. Let's see. The VIX was up over 16% to close out the trading day on Friday. If you don't see the situation with the growth scare or the new coronavirus strain in China get worse, you're likely going to see markets get better. Okay. I know there's big catalysts later this week. Really, Thursday, Friday are the big days for data, and big earnings on Wednesday. Could you see a bounce on Monday and Tuesday? Highly probable. And again, 10-year Treasury yields were down about 7 basis points on Friday, starting to break down a bit. You're now at the lowest levels you have seen since at least, let's November 20th or so. I mean, then you ultimately did fall to like 4.15%. So could 10-year treasury yields continue to come down? Sure. And that would be positive for markets. But again, with the backdrop of the consumer slowing down, we'll have to just wait and see. I don't think it's as simple as 10-year treasury yields fall and that's good. Because if 10-year treasury yields are falling because the consumer is falling out of bed and there's a growing risk of a recession, then that's obviously not going to be seen as good. So honestly, given the ending to last week, Friday was a very rough day. The VIX spiked. There was a lot of panic. We are soon to retest our 50-day moving average at $598.82. It looks like we did find some support coming in there around this level on Friday. And we are down about 2.2% from all-time highs. That's really nothing, okay? If earnings come in bad, Nvidia somehow whiffs it. I don't know how that's possible with hyperscalers that have already told us what their CapEx guidance is. Or if, the economic data this week just comes in really bad, you're going to retest this 100-day moving average at $591 per share this week. But I'm actually fairly optimistic that it's not going to be a terrible week this week, that we could actually move higher this week. Now, keep in mind, the second half of February is by far the worst 2-week period for markets throughout any given year. So it's not a big surprise that, stocks did bad on Friday or could, just not have a great time for the second half of February. Like that's common. We get better into March. March is a pretty good month, and then April's a really good month for a seasonal perspective. So again, I would be careful getting overly bearish right here because again, when you see a VIX spike that is that large, that literally, is almost 20%, it was 20% at one point on Friday, you need to see the fear continue to build. If the fear does not continue to build, coming on Monday morning, coming tomorrow, people are going to go, oh yeah, we should buy this, right? And that's usually what happens. Fear spikes on the VIX usually do not last all too long. And you're 18.21 on the VIX. That is pretty high. That is a very fearful level overall. So I'm optimistic this week can be a good week. I do think some sideways trading action could be in store until at least Nvidia earnings on Wednesday. Now, Nvidia, if they beat and raise like typical, I do think Nvidia will be rewarded a lot more than what we've seen recently. A lot of the times Nvidia is just, trading at all-time highs, heading into earnings, and, people kind of already know what to expect, and there's no big, surprise or shockers, and the stock trades lower a little bit, or it's not really rewarded for a beat and raise. I think this time around with Nvidia trading at $138 per share, which is down roughly 14% from all-time highs, you could see an earnings beat and raise like Nvidia normally does, rewarded a little bit more this time around, and 5-10% positive upside reaction could easily happen, and I think that would be again a boost for markets. But again, I think equally as important as Nvidia earnings this time around is the economic data this week with the consumer, and we will get a new GDP update from the Atlanta Fed GDP Now tracker on Friday via really those inventory numbers. So let me know what you guys think about all of this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.